Well, hello everyone and welcome to Momentum channel. In our video series, interviewing some of the amazing folks that we work either on Blossom, like get to know them on Blossom, as well as folks that have been pursuing financial independence, investing and savings. I'm super honored to be welcoming to the show, Carl.
Hey Mo, thanks very much. I appreciate it. Super pumped to have the opportunity to chat with you. I live here in Ottawa, so I live here with my spouse Rebecca and my three kids, Owen, Isla, and Betty. And yeah, I work full time for the military, as a lot of you know. Um, and I came across your channel Mo on YouTube, so I knew
Yeah.
you pre-Blossom. I think Canadian and T-shirt Adrian Barr was like the first person to mention Blossom.
Yeah.
But I was super pumped when I found people like yourself and other a few other content creators and finance folks were on there. And yeah, so I formerly did real estate investing. I'm out of that game now and
Wow.
focusing just on the finance.
How did you get started with investing in the first place, and when did you start that?
My first investing was actually in university, and I forgot about this until I was kind of spitballing with my wife. And I had joked and bragged about how I used to have like a 5% GIC. So when I was in university, I was a part-time reservist, and we're hiring if anyone wants to join the
Mhm.
forces. But I was a part-time reservist. So I did make fairly good money working throughout the school year. So I didn't need all my loan money. And so I would certainly use that towards tuition and that, but it freed up other cash. So when normally I may not have taken it, I did take it to use it towards the University of Ottawa, and I used other money to invest in GICs. And I still remember the first time they said no because I kept like rolling it forward because I didn't know much about investing.
Yeah.
I just had it in a GIC. And I liked the idea. I wasn't touching the money, and it gave me a small, 5%.
Mhm.
And I think I was buying them in $1,000 denominations.
Mhm.
Um, but then, I kind of fell out of it. Once they said no more, and the new rate they offered in like 2010 or 11 was something like less than half of what it had been, then, I just stopped. And then investing to me was really focused on real estate investing. I had a really good friend whose mother, she was like a professional real estate management person. So, just started slowly back in the 70s with one property and then another and another, and then leveraging equity. So I kind of grew up from like 17, 18 years old into adulthood, um, seeing how she, was successful in real estate investing. And it was a bit easier for me to understand. A
Mhm.
lot of people know about mortgages and that. It would give me a bit of time. So I was pretty lucky. My military job is something that is more cerebral, so I could do it from home. And
Mhm.
what that allowed me to do was, when you sign off work, there's no commute, no loss of energy. So I started to turn towards my hobbies. Now, one of my hobbies is aviation, and that's very expensive.
Mhm.
So at the beginning of COVID, I had my full-time military job, and I was working part-time for the city of Ottawa, and I was making fairly good money there. However, when I was trying to tally up, how much do I have to pay for my private pilot's license? How many shifts would that be at this job? And it crushed my soul,
Mhm.
because I make a good salary in the forces certainly, but life's expensive, and this is before I had the kids.
Yeah.
So real estate investing was great, but it's a slow burn. You're really just maximizing the tax credits that you get back, and you're getting that equity, and it takes a long time to get going. But I wanted to fly, and so I started to speak to other friends of mine that I know do well with finance, and I've always been very open with money, mainly because I'm federally employed. My name and my rank. You could, my pay is not hidden.
Mhm.
My spouse is government as well. So to me, I've never I've never been too shy about speaking about money, about asking questions, and that got me onto equities investing, and it became in the beginning, it was a little scary making those deposits to the TFSA, and opening a brokerage account.
Mhm.
But it was really the immediate return, and the liability was something I could control more. I could look into a company's sheets, their data sheets. I could look into what they're doing. I could go see them in the world. I could go into a Dollarama and I can check them out. But with my tenants, even though I had amazing tenants, there's the unknown. So I started to really slide away from real estate as my primary source of like investing, and that's when I really started in earnest to study ETFs and stocks and jump into that. And now I'm out of real estate entirely. So, um, which is nice. No 3 a.m. calls. The only
Yeah.
3 a.m. wake ups I get were like last night from my baby, which
Yeah.
I like far more than
At
a
10 o'clock.
plumbing issue.
Yeah.
Yeah.
100%. And so
Yeah.
at what year would you say roughly like you kind of transitioned fully to real estate? Was it like a couple of years ago or multiple years ago?
I started to like so I was building up another down payment.
Yeah.
So I was already saving, but
Hmm.
that money was just dead equity, right?
Yeah.
It was just sitting in an account. It takes a lot of money, as a lot of people know, to
Right.
buy another house, right? So accumulating funds in a savings account wasn't doing me any favors. And I kind of joke, my buddy whose mother was like my guide with the real estate. He told me one day, he's like, yeah, I opened a Questrade account. It's super easy. And I was like, well, that's reckless because,
Hmm.
I thought he was just jumping into it. But I had done about 12 months of studying, and following several content producers for the finance realm. And 2020 is when I started to divert all additional funds into equities.
Hmm.
And I just sold my the real estate. I'm completely out of the income in property world as of last September. So last September,
Nice.
and then that's which I know we'll touch on after, but that's when I started the Smith maneuver.
Is there a bigger why? Like I know your family means a lot to you. Touch on that as well. I'd love to know for the folks as well. Is the flying is the ultimate why, or is there other why as well in there?
No, that was like the impetus for it.
Yeah.
I used to work way back in the day before I was military. I used to work in the aviation industry, and I had
Yeah.
no care. I didn't care. I like to do my job properly.
Yeah.
The planes were really pretty. I got to
Yeah.
travel around the world, but I had no interest. So aviation was like the impetus when I was like, well, actually, I would like to fly.
Yeah.
I would like to do this. And then the power of investing,
Yeah.
like it just took off. And the why is a really big thing. And I was just speaking to my sister a few days ago, and she said to me, why? I was going over my Blossom account and my Smith maneuver and encouraging her to move forward with TFSA utilization in that. And she said, okay, but why? And my sister's very good at that. She wants like,
Hmm.
what's the reason? I love that. And the reason was literally, we all know we trade time for money.
Hmm.
And a lot of times that's fine. When I worked for the city, I was trading time and my soul a little bit to the city, but I was getting remuneration, right? So it was good.
Yeah.
And time is it. So I know a lot of people. Everyone's had a beloved family member who passed away before their time, and so I did too. My grandmother, my youngest is named after Betty, she passed away very quickly, suddenly after an illness, and that bothered me because her and my grandfather had plans to go do things, and they certainly did live life, but there was a lot that they had put on hold, and I didn't like that. And so to me, it's time. So money now gives me time. Financial independence gives me time, and what I mean by that is I'm not obligated. I'm not beholden to anyone. So even though I will work, I'm fairly young. I just turned 36. I can retire at 51 from the military. I absolutely will not be. I will. It may not be the military, and I'm in school part time now to look at other options. But um, I just want time, and I just spent a weekend at the cottage with my family, and there's nothing more fun than catching
Hmm.
frogs or searching for them. We weren't too successful. We got a crayfish, but that was really fun for me, obviously. And so money to me, I'm a pretty simple guy. I like, $19 shirts from Amazon. Um, I don't I don't want very many expensive things, but I do certainly appreciate time. Go to
Hmm.
the cottage or take a week off work. That's it. I just want to be able to spend time with my family, and money is an excellent resource to do that. Not by any means the only way, but for me, especially with my family spread out across the country, it's really nice not having to worry about going to visit my in-laws in Dartmouth. And like just not being too concerned about certain things because either I'm utilizing air miles well for,
Hmm.
to defray the cost of things. But yeah, I just to spend time with my friends and family, people I love.
Hmm. It looks like you've also made the right smart decisions along the way that allowed you to get to where you are, whether it was around the real estate time as well as now in the market. You did say that you were saving for a down payment at the time, and of course, you built a larger fund. What are some of the different tactics that you've applied, some of the different strategies that you've applied? And I know we were talking about like you've tried to gamify it too. So
Yeah.
tell us more. I was really keen to hear more about that, and maybe something that our audience can as well take away.
Yeah, of course. So I used to like when I was working for the city, I had shift job, so I'd work like 7 to 3, and 2 nights a week I'd go work for the city at nighttime. And as I'm going to shift work or any of the police officers or paramedic fire on Blossom will know like A&W is open at 10 p.m. You know what I mean? Like good foods, you can't go in and make yourself like a healthy omelet or whatever, but you can certainly get A&W. And so now, unfortunately, I'm gluten free, so that helps solve a little bit of the problem
Mhm.
right there. But before I was gluten free, I absolutely loved A&W and onion rings. So like I said, I'm in the military, so there's an expectation for me to maintain my fitness, and my occupation is infantry. And I remember it was 2020. I was doing a run downtown Ottawa with my regiment, and some of the younger guys behind me were having like a full-on political discussion behind me, and I was like, my gosh, like this 6 kilometer run is like I was out front, but I had to stay out front, but I was like, this is difficult. So skipping A&W is one of the things that contributed to better performance there. But I gamified it. I would take that $18,
Mhm.
which good for A&W and those who own the Royalty Corp.
Mhm.
But I would take that $18, and every time I skipped going by A&W and was like, I'll get a protein bar. I buy them from Costco. I live 900 meters from a Costco here,
Mhm.
so yeah, my house looks like it's sponsored by Costco.
Mhm.
Um, I would have like a liter of water and a protein bar. So I would transfer that money to my TFSA, and I would immediately, put it to use in an ETF. And the most fun was like XEI, because when I first started
Yeah.
buying it, I think it was like $21. So I, deposit $18, and like I worked 3 shifts a week, so I was being a bad boy. I was doing A&W or some other,
Mhm.
unhealthy food a couple times a week. So it didn't take long for 40, $50 a
Yeah.
week to be hitting that TFSA that
Adds
otherwise
up.
wouldn't have been there. And then I just really love the idea that cheeseburger I didn't get was now paying me a dividend monthly,
Yeah.
and there's certainly smarter things that you could do. I love XCPT now,
Mhm.
thanks to yourself and Car. Um, but I just really like that gamification of it, right? Like, so I'm not going to get the junk calories, and that cheeseburger is going to pay me, for the rest of my life, presumably, or until I sell the asset. So I
Mhm.
really like that. And the other fun one I just did it yesterday. I was at Costco again,
Mhm.
and I just look at my receipt, and every
Yeah.
time there's like -$6. I just bought some lychee fruit the other day.
Yeah.
My middle daughter loves it, but I saved $2. So yeah, I transferred $2, and I used to do it through Well Simple, but that 1% conversion fee, most of the time I eat it, no problem. But now that Questrade has fractional ownership, I've been
Fractional
sliding
buying.
towards that.
Yeah.
Yeah.
Was
So
it mainly because you were buying some USD type of funds? Is that what it was? You were
yeah,
buying Costco? Is that why you were saying?
yeah. Sorry. Yeah. When I save money from Costco, I
Yeah.
deploy that amount of saved
Buy shares
money
of
into
Costco.
the Costco stock. Yeah.
Ah,
Yeah.
yeah.
So it's kind of, which it doesn't sound like a lot, and it helped me reevaluate my spending. And also like I have the executive membership. Not that that makes me fancy. It's just I spend so much money there. It
That is
made
worth.
sense to do so.
Yeah.
So like my return last year was like $485. So I spent like 50 at Costco getting
Yeah.
some treats probably.
Yeah.
But the rest I deployed to Costco stock,
Yeah.
and it accumulates quickly.
TFSA is one big account that many Canadians could take advantage of. How are you using it, and what are some of the benefits that you see in tax-free savings accounts?
The main thing is like the unlimited growth. So to steal from Braden Dennis from the Canadian Investor podcast, he always harps on that it's called the Canadian tax-free savings account, where it should be called the tax-free investing account. And like I've heard the same from others as well. So I think I'm all about I'm all about like the mental aspect of certain things. I wouldn't have been able to get through some of the silly courses I've had to do in the military if I wasn't. And so um, I also have to teach. So when you teach young people, especially if there are dangerous things present, like you want to make sure the person's understanding. So the TFSA to me, when I describe it to others, is like it's like a garden, And I've heard it described as a highlighter, and you get to highlight certain things that the government's not allowed to tax, and I really like that. But that's
Mhm.
maybe more for people who understand taxation a bit better. But the example that I'm drawn to is like, you have a fenced off area of a garden, and you're given a seed, You want to eat that seed, or do you want to plant it into an apple tree, And if you plant it into an apple tree, it'll start to yield apples, and you can certainly
Mhm.
pluck those off and eat them right away, and we'll pretend you can't eat it and save the
Mhm.
seed. But you could eat the apple, or you could wait till the seeds, you get the seeds from it, right? And you can produce more. And so if you set the rule that like you're only allowed to put a certain number of seeds into that garden at a time, you can always take out as many apples as you wish, but you can only put a certain number of seeds in. my hope is that people see that it's better to be like a seed planter than a seed eater, you know? Um, and so the TFSA, I think it's super important for people to understand like these microtransactions, skipping A&W, $18, and this is what I try to tell my good friend, $18 doesn't make a big difference in my portfolio. Even today, it does not make a big portfolio difference. But even back then, I think I took my final paycheck from the city, which was like $5,600. I had a ton of leave I wasn't aware I had. So it was a nice bonus. Um, $18 in a sea of $5,600 is not much, but the the fact is it's every month, right? So for XEI
Mm.
in particular, it's every month it's there and it's constant, it's forever. The $18 was delicious, in an
Mhm.
A&W format, but it's transient, it's gone, right? And it makes you
Mhm.
feel crappy after, you know what I mean? Like, um, so the TFSA, if people truly understood, like I recently removed well, $22,500 from my TFSA. The majority of that was profit. So, I'm 36. My TFSA room is about 102, but my TFSA room is actually about 125, 126 because some of those seeds that I placed in grew,
Mhm.
right? And then when I removed them, as you know, you get the room back, and I happened to do that in November, so I got it back quite soon. But if people understood, like, $100,000 is not enough to retire on for sure. However, it's $100,000 plus your additional contributions
Mhm.
25 years from now. And so I kind of get sad when I talk to some of my friends who are so focused on RRSPs, especially those in the military. We have a fairly good pension, and it makes me sad sometimes because you could do what you're doing in your RRSP to get those tax credits. Like, sure, you're going to get a little bit of a tax credit at your nominal tax rate right now, but what about no taxes, right? And
Mhm.
if even if you take that, say, $5,000 tax credit you got back from RSP contributions, if you put that into your RSP and it grows to $100,000, well, if your tax rate's 42% when you retire, you're going to pay $42,000. You're not going to pay 5,000, you're paying $42,000. And I think if more people looked at it big picture, they would see the power of it,
Yeah.
and it's so easy to open. It's so easy to open them. I really suggest people open them and stick with a simple strategy until they get maybe more advanced.
When did you start your Smith maneuver? I know earlier on we touched on that. Was it fairly recently? How has that experience been for you, and how's it going along so far?
Um, it's going good. Like it's still in its infancy, and in an investment lifetime.
Yeah.
We're June now, so we're looking at 8 months.
Okay.
The proceeds of the sale of the last property, once they got out of trust and they, dispersed the funds, um, I put the majority of it onto this property they live in, and
Hmm.
then that just freed up equity. So
Hmm.
um, we, I got everything said and done. I used Scotiabank,
Oh,
which is
that's amazing.
interesting because they were my first. They were the first stock that ever got cut from my portfolio.
Okay.
But I'm very familiar with their mortgage products because
Yeah.
of all the dealings I've had with real estate. So um, there are a few companies that offer different products for
Yeah.
the Smith Maneuver, but the Scotiabank step is like the best
Yeah.
one. And so once I got my line of credit sorted out, I started a new checking account. I wanted to keep everything super clean.
Smart.
I deployed the first tranche of capital like in November, I would say.
Yeah.
And the Smith Maneuver portfolio is very much a long term.
Yeah.
I haven't decided yet whether I want to do like the dividend, speed up the prepayment of my mortgage by dividends. When I remortgaged, I made sure that my mortgage payment was super low because I
Hmm.
wanted the ability to have cash flow. With my real estate properties, we were cash flow starved for a very long time, and I didn't like that. Felt like the same kind of color that I feel sometimes in the military. I didn't like that. So, um, yeah, we made a super low monthly payment, and I prepay. And as you know, whatever I prepay on my mortgage slides over to the line of credit immediately, like the next month.
Hmm.
Some of these mortgages you have to reapply each month, which
Hmm.
is not good. It does give your credit a little bit of a hit, but I just didn't want the hassle. So November, December is when I really started to deploy money. I made a few Trump bets on the opening up of oil, and some of the, loosening of things that were restricting certain companies. And so, like, it's all on Blossom, like Exxon, Cheniere Energy, some of those
Hmm.
companies, Northern Dynasty Minerals. Um, even companies that were going to benefit from either party that won in Canada. So, I have probably about 5% to 8% is speculative plays.
Hmm.
If they go wrong, I'll be able to harvest that tax loss, although that's not my intent. And I kind of hate when people kind of like use it as a get out of jail free card because it still sucks. And I'd rather pay tax than lose money for sure. Um, but yeah, the account itself, it's going, it's nice. I'm still kind of trying to build those positions,
Hmm.
and the dividends that I get right now, everything's being reinvested, and we'll see
Pretty
what
much.
happens tax law
So in
time.
terms of, do you keep it with Questrade, this one as well, Kyle?
Yeah.
Yeah.
Yeah, it's with Questrade. All my accounts are with Questrade. I have a TFSA account with Simple still.
Hmm.
And it was fractional ownership that brought me to them.
Hmm.
So I really like Questrade. I've been there for a while. I have trust in them. I've had a few issues like other people
Hmm.
with respect to like, call times or waiting or having
Yeah,
something silly fixed, but overwhelmingly happy with both.
that's good. That's good
And
to hear.
yeah,
It's
yeah,
funny enough
it's
because my experience has been way better with Wealthsimple, to be honest with you. And
yeah.
recently I actually moved to Questrade because of their promotion. Happy about the promotion part of it, but all in all, I don't know. Sometimes it's the first impressions. I absolutely love Wealthsimple. I don't know. It didn't. I'm not sponsored by them whatsoever, but I think the key difference for me is that I don't invest too much in USD funds. So that's why like it wasn't the big deal. Like obviously you're right. It's like you have to pay that 1.5%. Whereas I think with, if I'm not mistaken, with Questrade, particularly these days now, you might even go for Questrade Plus, which I think it would remove all the costs and journaling, and even like you can use the Norbit Gambit, whereas you can't use it with, well, simple.
I normally each tranche of cash that I throw over from the Smith maneuver is like between two and $3,000. So,
Yeah.
1.5% on 3K is like, yeah, it's not ideal, but at the same time, it's not going to make or break, especially, if I'm investing in companies that I have good conviction in.
Yeah. Carl, investing in the stock market, investing in general, what have been some of your key learnings that you could share with our audience?
Don't be afraid to cut your losers, like I knew all the right things and could say all the right things in 2021, 22. But it wasn't until I was tested. Like I had a rule. Scotiabank, I had worked with them before. I really like Scotiabank, so I had a very large position in Scotiabank, and I was getting some very large dividend payments every 3 months, which were
Mhm.
amazing. But then they announced that they weren't going to be continuing their dividend raises, and so that was one of my red lines. Was if a company for not for any reason, but if there's an explainable reason, no worries. But the cessation of like a dividend raiser program, I was done. So that was one of my red lines. It happened, and I was almost relieved that it happened. I thought it was going to happen. I was upset over the South America expansion not really going through the way they wanted it to, and but I was still holding on. And those dividends certainly make waiting easier. But opportunity cost was like I'd wake up and I would be like, "What am I missing out on?" So. Um, when they announced that, I sold them. And so don't be afraid to, write them down. Everyone says this, but actually do it. Write down your thesis, because something that gets measured gets, tracked, or something that's recorded gets tracked. And so I wrote down in my little book, that a dividend cut would signal that I was done.
Mm.
And the other thing that like they probably would have got cut on the failed South America expansion anyways, because that one of their growth vectors was that, and they were failing to follow through with that, and so that would have got them cut. But the dividend thing made it easy. Okay, done. And yeah, don't be afraid to do that. It was really scary selling my first position. I think my total return was like 3% because I was in the hole. So I had made money on the dividend, but total return was junk. So
Yeah.
and total return is key for me. So don't be afraid to fire your losers, right? And
Yeah.
sure, investigate, make sure it's a loser and it's not like a cyclical business that's just in like a known down spot. And then due diligence. Everyone says do your due diligence, and like, what does that mean, right? Uh, it means like investigate the company so you can explain it to someone. Like pretend you're handing a bag of cash with a dollar sign on it to someone from that company. You know, but before you would do that, you'd be like, "Do you have ID or something? Can you confirm that like so like in real life, I find
Hmm.
people are super intelligent and reasonable, but when it's investing, they're like, "Oh, well, this person I like bought it, so I will too. I trust their judgment." But you can't do that, especially with money. And as a father, I see it as my money, but it's not my money. Mine is ours. So the stewardship of other people's money even further reinforce that due diligence is super important. I feel like at work I do like mini investigations. I used to
Hmm.
in my former job, I used to do a lot of small ones. Now I do a little bit bigger ones, but I find it easy to investigate people or to look at people, to speak to people and kind of get an appreciation for who they are. And I carried that over to companies. So like Bird Construction, people love this story. Like I drive to Carling campus. I ride my motorcycle in the summer. I'm super happy to be on a bike, but I'm like a little boy. So I'm looking at the LRT station being built because they have some cool machines there.
Hmm.
And I saw Bird Construction and they were on my list. So I thought, what the heck, I'm going to check them out. So I called Bird Construction. It took me a couple of days to find a number that fit for the appropriate team, and I did a site visit. And I just talked to a few of the Bird Construction folks, guys from the, we'll say general duties, like laborers,
Hmm.
and I got to speak to a site super. I spoke to one of their project managers, which was cool because I've been involved in project management in the past. And I spoke to them and like I was a nobody. I told them I was like, "Oh, I'm thinking about investing in the company. My stepdad's in the trades. I'm just interested." And they were very, very awesome, just speaking about how they liked the company. So a little bit of like that social interaction too.
Hmm.
Like it's not like I call the company and if the person who answers is rude, I won't invest in them. But
I hear you.
looking on Glassdoor, looking into how
Mhm.
their culture is really big for me too.
What are some of your favorite, perhaps, finance, investing, saving resources, whether it's books, podcasts, you name it, that you'd like to share with
Um,
us?
for the podcast, like I mentioned the Canadian Investor podcast. That was
Mhm.
fun. The format is awesome. It's like two friends speaking. Braden and Simon. Simon is an Ottawa boy here, so I
Oh,
like
no.
that. And then with Dan from Stock Trades going over there, I really like that. I really appreciate his style, and I follow him now on YouTube. The Dividend Guy blog with Mike Ehu. He's out of Montreal. I
Mhm.
really like Mike. He's got two podcasts. He does them with his sister-in-law, Veho. They had an episode where they interviewed a female investor, and I sent that to so many people, so many of my female friends, because like people have noted, like there's not a lot of voices for female investors, regardless of all the amazing ones we have on Blossom. It's still kind of an uphill battle. So
Mhm.
I would recommend people check them out. He's got the Moose on the Loose is like a 10-minute podcast, Monday to Friday. That's fun. Um, and then the long-term investing podcast with Barry Dworkin and Ernest Wong. It's like Baskin Wealth Management. I would definitely recommend that if you like the long form um, podcast, format. And then for books like I mean, all your guys and gals who listen to this podcast and YouTube channel, they know a ton of finance books. So I'll tell you two books that I really like that are not finance related that certainly have an impact on me. And one is the Compound Effect. It's Darren Hardy. Yeah, the Compound Effect is about how small you can see it kind of links up with my gamification.
Yeah.
Small things daily, build momentum, right? He calls it Big Mo.
Mhm.
So you can
Yeah.
co-op
Cool.
co-op that Big
I would
Mo.
love that book, huh?
So he talks about how like you can't point to which sit up gave you a six pack, right? But all of them certainly contributed.
Mhm.
So it's the same thing, like positive, smart decisions daily can compound into some wonderful things. And he touches on finance and budgeting a little bit. And then the other one is calling bullshit. And so it's called the art of skepticism in a data-driven world. And it's really good for there are a lot of people, especially on Blossom, like even me, I write things, I try to make sure everything I write is 100% correct. And I don't know everything,
Mhm.
so I'm cognizant of that before I write things and I do my own due diligence on my posts. But that book was really good for helping. It's actually something that's been on a book list for a military school that I attended, and it's really just about being skeptical about information and the source of the information. And there might be some cool tidbits in there because we've all seen people. They're like, oh, this hot stock's going to go to the moon, and then a bunch of new investors go into it, and then it's a rug pull. So like evaluating who's telling me it, why are they telling it to me, how do they know this? Those skill sets that you kind of pick up. In investigation type careers, they're all consolidated and placed into this book. And chapter 10 is one of the best ones for sure. It's on spotting kind of mis or disinformation and how to handle that. But it's really relevant in the investing space, especially where like news, we all know what news can do to the markets. And I haven't looked today. I'm sure futures over what occurred, overseas has had a little impact on them. We'll
Mhm.
see tomorrow, but cutting through the noise and looking at
Mhm.
what's really there. I would say that that book, Calling Bullshit: The Art of Skepticism, is a really good one.
I'm gonna definitely check out those two books. I hadn't come across them before or read them. So yeah, thanks for sharing those resources as well as the podcast, Carl. I think they're gonna be super helpful for many of our audience. It's been a wonderful time talking to you, Carl. I'm so glad that we got connected and had the opportunity to actually talk about these very interesting topics that I'm very passionate about. I know you're passionate about as well. You're a family person, and I admire that about you as well. And I think it makes it fantastic to bring you on the show. Thank you for sharing your wisdom with us. Any final words or comments before we wrap up?
Oh, just learn as much as you can. There's so many amazing resources out there. And, I'm blown away that it took me so long to find somewhere where I'm so happy. I could read data reports all day long, financial reports, and it's interesting to me. But not everyone's going to be at that stage right away, and don't think that others were too. So listen to a Canadian in a T-shirt, to Mo. Go and read up Brandon Beavis. There are a lot of people out there who specialize in making it palatable, and just start with them. And every time you hear a word you don't understand, go and look at it in Investopedia. Just start slow, and you'll move from memorization to understanding before you know it.
100%. Be curious, right? So be curious, show interest, and over time you're gonna learn. And I mean, we are all learning. It's the learning never stops. I think it's an ongoing journey for all of us. Well, thank you so
Yeah,
much, Carl. I really appreciate your time this weekend, and I look forward to chatting with you very soon on Blossom again.
absolutely. Thanks, Mo.